Well, we're back with you to take a look at your grain trade, and we will examine that this particular segment here. We will go to the trading floor in Chicago and find out what's going on with the corn market first. Keep in mind that we had an overnight export sale announced, and it was for corn. And actually, this time around, it was for unknown destinations. So it was 145,000 tons actually to unknown destinations. So the corn, it is kind of holding its own today. The March corn has been seeing some profit taking at the end of the month here in the overnight trade and early this morning, but it is kind of lifting off of its earlier lows now, and it's back within a penny of its high of the day. March just a half lower now at 361, and July down a quarter of a cent at 377 and a quarter. And new crop December, in case you're wondering, is at 393 and a quarter, and that is down just a quarter of a cent. Meanwhile, on the soybean trade today, on the March, we are down 7.5. We're at 992 and 3/4, and we have the May contract 7.5 lower at 1003 and 3/4, well off of its earlier overnight high by about 9 cents. On the wheat trade in Chicago wheat, we now have the March contract 4.5 lower at 452 and 3/4, July down 4 1/4 cents. In Kansas City wheat this morning, we have the March contract down 3 at 466 and 3/4, and now you have the new crop July down 3. 496 and 3/4. It did get as high as 501 though this morning. In the Minneapolis wheat trade, we have the March now trading a half cent lower at 615 and a half. Meanwhile, July up 3/4 at 634 and 3/4 right now. In the cotton market this morning, we have the March contract currently 8 points higher. Bit of a turnaround here after opening about 50 lower. We are now at 77.11 cents per pound, and that December new crop now 74.29. That's up 14. Let's go to the trading floor in Chicago and find out what it's all about. Let's go visit with Todd Bubba Horwitz of BubbaTrading.com. Always a treat to get to talk with you, Todd, about the trade. We were talking this morning, a little maybe pre-end of the month profit taking place. What do you think?
Good morning, Marlon. Well, we've had a very nice rally. I mean, if you take corn from, the bottom up to here, from 345-ish to 362, 363, that's a pretty nice little rally. Mm-hmm. I would expect some selling, and I'm looking for a place to rebuy, and I think that place is going to be somewhere around 355 or 356, where I'd like to step back in the market and buy again. I think we're going a lot higher than we are right now. I think the equities are going to cooperate with my thesis here, so I think we're going to see some continued selling there, which will bring more money in here, and I think the same goes pretty much across the board. And in my eyes, corn, wheat, and soybeans are all bullish now, and soybeans are been able to hold above that 985 level for the last few days. So now I'm willing to get pretty much across the board. I'm a buyer if I can find the right levels.
All right, on the corn chart, we are showing that rally that you were talking about here over the past few weeks. Technically speaking, how overbought were we in the soybeans if you look at a soybean chart?
Well, I don't know that we're dramatically overbought. I think the key was 985 to get above. So now that we're there, we've been churning around. We've run up a little bit and come back. We're, I think, 1002, 1003, 1004 the last couple of days. We're going to settle down. I think we can settle somewhere around 990, 991. I think that we're in pretty good shape. And I'm now looking to be a buyer pretty much across the board at a little bit lower prices than where we're trading now. I think I'd look at corn, like I said, 355 through 356. I'd look at wheat about 445. And I'd look at soybeans anywhere above 985 if it gets closer. Again, I think we have a big season ahead of us. I think there's a lot of good things that are going to come out of this. And again, it will only be helped if the equities start to sell off. And they can't even hold the gains they put in this morning right now. They're starting to sell off. So I think it's all full steam ahead.
All right, the soil conditions, we were just talking about that in Kansas and Oklahoma, just getting quite dire. The short to very short category in Oklahoma, 93% on the topsoil and the subsoil. That's not a good way to start out a growing season.
No, it's not. But one of the things we do know, Marlon, a lot of these things resolve, and with today's technology and with the equipment that we have, there's a lot of things that we can do about that ahead of time. So we've got enough time to really get ready to go. So I'm not really concerned about that at this moment here. I think that things will manage to work themselves out.
I'm thinking more in the perspective of the wheat angle of it, where it's dryland wheat out there. So yeah, we'll have to keep an eye on that for sure. All right, Todd, we'll come back here in just a moment, and I can't wait to get your thoughts on this very choppy cattle market that took place yesterday and again this morning. Things kind of all over the place. We'll sort that all out when we come back in just a moment. Well, let's resume our conversation with Todd Bubba Horwitz of BubbaTrading.com in Chicago. He joins us from the trading floor there. And okay, yesterday was a very choppy day in that cattle market. We opened up relatively stale, didn't do a whole lot, but then it sold off triple-digit losses within the first hour of trade. But then by mid-session, it had kind of elevated back, and we actually closed mixed at the end of the day. I want to take a look at our current prices here, Todd, and get your analysis on what we're looking at. Now, we're starting to see kind of a repeat of yesterday, where we have the April live cattle down $1.33 again at 122.85. That's only a dime from our low of the day. June down 132 at 114.73 right now. That's about $1.30 off our early morning high. On the feeder cattle side, let's check that out, where we have March down $1.29 now at 145.88. April down $1.20 at 146.60. So again, more pressure today. We did hear the cash cattle market was weaker yesterday, but the beef cutouts were higher again. So what's going to drive this market now?
Well, I think the markets are trying to search for a bottom and search for a low. I think if you look at fat cattle, now I actually bought a little bit this morning at 122.90 just as a trade for the day, but I'd actually really like to see 121s where I want to really step in and buy and accumulate. I think that's where we're going to probably end up going before it's all said and done, and I think that's a great opportunity to step in and buy. And I think when you look at the feeders, I think 144 is a great level to go ahead and step in there. I'm a big believer that we're going to have a bull market this year for at least the first half, and I think we're going to see a lot better pricing going forward. A lot of this will tie into, again, back to equities a little bit, but I think with the overall improving economy, with everything else going on, I think that's going to bring in more demand, which I think will push prices higher. So I think we're in really good shape. I just like to see a little bit further downside to find a little bit better support, and I think we go higher from there.
How much upside potential are you targeting then?
Well, I think the fat cattle can make new highs. How's that? I think we can take out that, what would we put in, 130, 131 over the last quarter. I think we can go there easily. I think we can see 160 in the feeders. I think we can have a big move. So I'm gearing up for a big move. I think there's going to be, when you clear out the shorts, which will be the first start of it, I think we can get that move back up to those highs we made back a few months ago.
So what kind of time frame are you talking about? A month, 2 months, summer, or what?
Well, it's really hard to time the market, but I would say if we're going to get this kind of move, I would say by April. My concern comes after April. We start to go into backwardation in fat cattle, which is always a little bit of a concern. That's not a very bullish pattern. So I would have to say by April, I would think we'd see these kind of prices, which actually is not really that far when you think about it. I mean, you get a couple of limit up days, we'll be right there.
Lean hog trade, let's take a look over there, and on the nearby February contract on the big board there in Chicago, we are currently 25 higher at 72.70 per hundred, but all the other months are a little bit lower. We have the April down 58 now at 72.32. May down 23. How bullish or bearish are you on the lean hog side then?
Well, notice we talked about a couple of weeks ago that we said that spread would come back to narrow, right? The February, April, and look what's happened to it. Now it's back to even. I think we got to see 70 in April hogs. That's where I'm a buyer. I think right now we can consider pretty much range bound between 70 and 77. And if we come down to 70, I become very bullish, and then I want to be a big buyer and watch them run up because I think it's going to be a great year for the hogs as well. I'm really pretty bullish the entire ag space at the moment. So I'm only looking for spots to buy before, and then if I can find those spots, I think then we look for some really good price action. I think there's a lot of factors are going to start to weigh in the favor of not only just the normal everyday things that we look at.
Todd, that's a lot of information that we just went through, so thanks for sharing all that with our audience. Good to visit with you again. Todd Bubba Horwitz of BubbaTrading.com. He is located in Chicago, so very choppy markets in the early going today. Kind of a repeat of yesterday with the cattle sinking about an hour deep into the session.
But you made a good point. This is the final day of January, so okay, let's see what happens. Markets editor Marlon Bull.